We're going to take a quick break. We're going to find out what David does like in Pro Picks. Pro Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, your first pro pick, I'm not super familiar with this, so I'd love a backstory on Kraken Robotics. It sounds like a concept stock.
Well, the initial concept was fantastic. It was some people wanted to go find sunken Spanish galleons with a bunch of gold on them. So they were treasure hunters. And so they built a technology so that they could actually go treasure hunting with drones in the ocean. To do so, they needed to build out underwater battery technology and really great sonar technology. So those are the two core products that Kraken offers: is sonar and underwater batteries. And
so originally developed, so it was almost like a hobby.
It was 100% a hobby.
Okay.
It was a very wealthy individual wanted to go find sunken treasure.
And then how does it turn into a business?
They started getting inbound interest from both defense contractors, but also oil and gas and resource exploration companies. So, if for exploring the bottom of the ocean for resources, you're generally doing it with drones. So having an unmanned underwater vehicle. And their battery technology can withstand pressure at incredibly can withstand the pressure at incredible depths, which is the secret sauce of what they do. It's really hard. Everyone's kind of
we learned that from that tragic submarine accident.
Exactly. It's a whole different can of worms when you're operating at depth down there.
So you're a big shareholder. It looks like you own under 10%, just under 10% of the company. The ticker is PNG. It's had a huge run. Yep. Does it go much higher? We obviously think so. We continue to hold it, and we're very optimistic on the company. We think the geopolitical landscape. I think what we heard about the Golden Missile Dome yesterday. Defense spending is going to continue to increase, and if you look at how Navy spend is going to move forward. Building a submarine for hundreds of millions of dollars that you have to train people on is very expensive. Putting smaller drones out there at a 10th or even a 50th of the cost is the way a lot of these NATO navies are going to go. And they've got a strategic partnership with Anduril, who is, JD Vance is a shareholder. It's the leading kind of new tech U.S. defense contractor down in the States. So when we look at the order book that Kraken's building right now, we have a lot of visibility on continued growth for the business. Okay, your second one is Dian Durham, and it should be just a very boring business, legal software. But that's almost like besides the point of what's going on at Dian Durham, because there has been a very dramatic, what do you call it? Like almost a family feud at the company. So can you backstory that for us? And then we can talk about why you like it.
Some people like watching Days of Our Lives. I watch Dian Durham. I don't know how far we can go back here, but it's obviously
a podcast. We can go far back as you want. Yeah, Great, lay it on me.
Matt and Tyler would kill me if I went right back to the beginning. So these
are the brothers that are.
Yeah. So Matt's the CEO. Tyler is a large shareholder of Dian Durham. I think these two guys built a great business and generated a ton of economic value, a ton of wealth. They IPO'd. They were the first IPO in 2020. I think they led the whole IPO boom. IPO'd at, I think it was $7. Stock went up to almost 50. And they were they had tremendous access to capital to exercise their M&A strategy. You kind of fast forward to about a year and a half ago, 2 years ago. And, it became evident that a lot of the acquisitions, weren't working out as well as advertised. So there was a group of shareholders. You can read Globe and Mail and read all about it. that just went to speak to the board and said, hey, we think we need a more disciplined capital allocation process here. We probably need to delever the balance sheet a little bit. And Tyler was one of those shareholders voicing that opinion. Matt was
his brother.
To his brother. Matt was of the opposite opinion. And then, nobody agreed. So it ended up with Engine Capital from New York getting into the mix and leading towards the end of last year. They put a dissident slate forward at the annual meeting, and they took over control of the board.
So where does that leave the company now?
Stock's just languishing. It's down $8-9. Matt has public press release he wants to buy the company for $20. I kind of asked myself why he does that.
But when a stock is trading at $9, it tells you the market is giving that offer no credibility.
Exactly. So we don't I'm not going to tender my shares to Matt at $20 because I think this business, and the reason Matt wants to do it is he knows private equity would pay $25 plus for this business all day long. And so here we are. With the turmoil, there's a whole bunch of investors that wouldn't buy the stock because they were concerned about Matt's leadership. And now there's a CEO search going on. Everybody's talking behind closed doors about what's going on with the company. This is fundamentally a really sticky business, generates a ton of free cash flow. We're going to get a new management team in there, and they're going to execute for 3 to 5 years. And we're going to be really happy we talked about it here at $9.
So you mentioned all that drama, and the business can be as good as it wants, but if management is busy, with sort of infighting or dealing with proxy battles, and I know that some of that has been put to rest. Did they lose business during this period? When you looked at the actual fundamentals, did they remain sound?
The fundamentals have remained sound. There has been a little bit of client churn, and which is normal. This is a very public battle, and clients they can read the newspaper and social media as easily as the rest of us. So they know what's going on. So yeah, that's why we from our perspective, we don't like to engage in that way. We were pretty quiet in the background throughout this process because these types of these activist campaigns, they are defocusing to management. It can have impact on the customer base. A lot of Canadian activists are really nice and do things behind the scenes, and that's definitely
That's your approach. Okay, you said you don't really invest in commodities, but TerraVest has some energy exposure. It invests in oil services companies. Is that right?
Yeah, so they buy a bunch of companies that bang out steel and produce products for oil and gas and other more traditional markets. They build propane tanks. This is just a wonderful business. I think we originally bought it back in 2014. I think our first purchase price was $6.05 a share.
$6.05. Yeah. I'm underlining that because TVK now trades for $167.
Yes. I think this is probably the best performing stock in Canada that nobody knows about. And
so why did it take off like a shot, particularly in 2023? It's just it was I'm looking at it. In 2023, it was around, I'm just picking a random point, call it a $30 stock, and now it's $160. Why did it take off?
Yeah, as the market cap, as the company continued to grow, the market cap kind of crossed through the $500 million and $1 billion cap threshold. So it became an idea for a lot of the all cap Canadian managers. And so when it gets to that market cap size, and then you just look at the economics, they've grown their free cash flow per share since 2013 at about 20% annualized. That makes every single fundamental investor blush and start buying stock. And then when you look at the future, they've done that historically through great capital allocation. And when we looking forward, we think they have an opportunity pipeline of over about 400 companies. So we think they can double again in 5 years and then double again 10 years out with the opportunity set in front of it.
Their revenue surged as well. So it's not a story where you all of a sudden saw a decline. Was the catalyst of that acquisitions or just kind of finding their stride?
They'd been hitting their stride for a long time. It was very much getting to that market cap size and then actually going out and talking to the street. I remember I'd call up Dustin, the CEO, and he'd be like, Dave, I'll talk to you because you've been a supporter for so long, but I don't like talking to investors. And he does like talking to investors now. But they just didn't talk to anybody, and they were just going about running their business. And like if a CEO doesn't really want to talk to me because he knows I'm a waste of time because he wants rather be building his business, I'm not offended. I think that's a wonderful thing.
When we see a stock that is such a runaway hit over a short period of time, my obvious question is, how much more upside is there? You say the business can grow. Does valuation come into play at some point? How do you think about that?
Valuation does come into play. I mean, this was growing. This has started from such a low multiple. Like it's kind of it's still attractively priced range for us right now. So we continue it's a top 5 holding for us. And particularly given the credibility of the management team, their focus on operational results, their discipline on capital allocation, we believe they can actually execute on the M&A and organic growth to double in the next 5 years, which makes this stock very attractively priced.
David, thank you so much for joining me. What an insightful episode.